On Wall Street, stocks fell just as investors start to gear up for earnings season. The three major indexes dropped sharply early in the day, with the Dow at one point losing more than 180 points, but those losses were pared by the end of the session. The blue chip Dow index closed down 63 points to 19,891. Nasdaq lost 16 and the S&P 500 off 4. With today's decline, it appears as if the big rally in stocks since the election is taking a somewhat extended breather. Bob Pisani explains why.
The markets are weak today going into earnings season, and for a very good reason. I've called the market a coiled spring several times in the past week because the markets are essentially priced for perfection. Stocks are essentially at new highs, but consumer sentiment's at a new high and investor sentiment is also high. On top of that, there are very high expectations that earnings will expand in 2017. Some are saying the S&P 500 could put up a 20% increase in overall earnings. That's an awful lot to ask from the stock market. Then you throw in the now well-known Trump tweet risk and the difficulty of knowing the final impact of the Trump campaign promises of lower taxes, less regulation, and fiscal stimulus, and there's plenty of reasons for the market to take a bit of a pause. Now, we've already seen Dow components like Disney and Boeing and Coca-Cola and Goldman Sachs and Procter & Gamble get various downgrades this week. Several major bank earnings are out tomorrow, including J.P. Morgan, Wells Fargo, Bank of America, and PNC. And while most industries are not seeing any real increase in 2017 earnings expectations since the election, earnings for big banks have seen modest bumps up. The problem is the prices have run up really big. So the bank index, for example, is up over 20% since the election. They're already pricing in higher earnings. J.P. Morgan CEO Jamie Dimon will likely give upbeat comments on the economy, but don't expect much in the way of guidance. He doesn't do that. The bottom line is earnings will probably get a nice boost this year. Maybe not 20%, but 10%, certainly doable. But the markets need to take a breath and believe that the data will be forthcoming. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.